Funds. Funds are amounts set aside for a specific purpose. How are funds presented? Funds are cash, if they are set aside for current purposes. For example, petty cash fund, the most common. Working fund. Payroll fund. Travel fund. Tax fund. VAT fund, for example. Change fund. And dividend fund. If the funds are for non-current purposes, they are not presented as part of cash. Instead, they are presented as other non-current assets, or long-term investments. For easy recall, our non-current fund mnemonic is PRIC. P-R-I-C-C. PRIC. P, for pension fund. R, for redemption fund. Example, to redeem bonds payable. I, for insurance fund. C, for contingency fund. And final C, for capital fund or plant fund. This is for acquisition of PPE items. We all know that bonds payable and PPE are long-term items. That is why the funds for these items are presented as long-term investments and not cash. However, if the bonds are current or payable in the current period, then the fund qualifies as part of cash, being its purpose is now current. On the other hand, PPE, as an asset account, is always a long-term asset. Meaning, if the fund for PPE is intended to be dispersed in the current period, it is still not presented as cash. The capital or plant fund remains as part of other non-current asset, or long-term investment. Let's apply. Terry has the following funds as of December 31, 2019. 50,000 fund, set aside for payroll, on January 15, 2020, and January 31, 2020. And 100,000 fund, set aside for the purchase of machinery, on January 25, 2020. Requirement. At December 31, 2019, what amount shall Terry report as cash? For the first given, this is payroll fund, a current purpose. This is cash. For the second given, even if the fund is to be used next month, a machinery is a PPE item, a non-current asset. For capital fund, the rule stands. It is always non-current, and the fund is not presented as cash, but long-term investment. For our answer, we have 50,000 only.